Now in our studio to talk all things Wall Street is Ralph Schlosstein. He's CEO of Evercore Partners. Ralph worked at the Treasury and White House as advisor to President Carter in the 1970s and founded asset manager BlackRock back in 1988. So good afternoon.
Thank you.
So
welcome.
It's good to have you back. And I know last time we talked, I think it was early June, we talked a little bit about the economic outlook. You were still, I think, somewhat cautious. Still cautious?
I think I am still cautious, primarily because I think I said at that time that free fall had stopped and that we were now in a period where we were bottoming out.
Right.
But the real question was the pace of growth that we would have once we had bottomed out. I'm still concerned about that because it's hard to see what will be the big engine of growth that fuels a strong recovery in our economy. I think we have a couple quarters coming that will show positive comparisons, pretty strong ones, because inventory rebuilding will be required. But once we get past that, we believe the consumer will be a drag on economic growth and that we'll have subpar growth.
I mean, safe to say at this point, Ralph, that there's kind of like artificial might not be the right word, but between stimulus and we talk about cash for clunkers, there's a lot of money being kicked in to the system at this point, the economy. That's going to eventually go away. And then the question is, where does all the growth come from?
Right. I think, you have the stimulus, and as best as we can tell of the $700 billion plus stimulus, maybe 10 or 15% of it is in the system now. The lion's share of that comes on stream over the next year. Cash for clunkers is a highly levered plan, but which has a short-term effect. And then this inventory rebuild. 6 months ago, CEOs had their heads buried in the sand for fear that the end was coming. So we shrunk production dramatically, and now even with slightly picked up demand, there'll be a need to produce more.
In terms of where you sit and what you're seeing, I mean, where do you still see kind of signs of malaise when you look at the financial environment?
Well, I think the biggest area of malaise is the consumer. 70% of the economy. The last 8 years, we had 0% savings. Savings has now ticked up above 6%. We believe it'll be in the 6 to 10% range for a few years for consumers to rebuild their balance sheets. That's a drag on the economy.
All right. So do you feel like then, I'm thinking of what the administration's doing right now, are they in any way setting the programs and plans in place to kind of pick up for that gap where it might be not, what's been filled by the consumer, but maybe won't be in the future? Well,
I think the administration has been appropriately balanced between a quick, aggressive stimulus to the economy, and
that they had to do,
which they had to do to prevent to stop free fall, because we were in free fall both economically and the financial markets. That's been done. Now I think we have to give that a chance to work, and we can't forget the enormous debt that we're placing on our economy and on future generations. Debt this year as a percentage of GDP will be 10%. That's
tremendous.
Never happened in peacetime. So I think it's way too premature to talk about additional stimulus.
All right, we're going to take a break, come back and talk some more.
Terrific.
All right, we're talking with Ralph Schlosstein. We are taking a break, everybody. It's about 35 minutes after. Stick around. We're going to talk more about also the economic environment, but also specifically the M&A environment. Stick around. We're back in 2. I want to get back to my interview with Ralph Schlosstein. And Ralph, when you look at these mortgage finance giants, Fannie Mae and Freddie Mac, what's the future of them in your view?
I think that historically we've had a very mixed message. The idea of them being private companies owned by the public, trading publicly, and trying to accomplish public purposes, governmental purposes at the same time.
Right.
I always felt that was an accident waiting to happen, and it did. And I think in the future, I think we will find a separation of the governmental and the private functions. The governmental functions will be truly operated by the government the way Ginnie Mae is, and those things that aren't the true purview of the government presumably will be privatized, and although I'm not sure that the current shareholders will be much of a participant in that.
Well, that brings me then maybe to my next thought here. In terms of so much government involvement in the financials right now, I mean, obviously necessary, some would certainly argue because of the crisis, but important that the government back off as quickly as they can?
Yeah, I think that I wouldn't say as quickly as they can, because I think the answer should be as quickly as they can, consistent with not upsetting the system again.
And that's possible in your view?
Well, I think if, we still have an enormous amount of government support in the system, trillions of dollars through the Fed supporting the debt markets. We have still hundreds of billions of dollars of capital invested in some of our largest financial institutions.
Right.
To pull that back as quickly as possible would be a mistake. I think we need to come in for a soft landing. Having said that, we clearly need to be thinking about an exit strategy, because this is not a healthy thing.
All right. In terms of what's going on with the government and the financial firms, what do you think about some of the regulatory reforms that have been talked about by the Obama administration? And you've been a supporter of the administration.
Absolutely. And I think they're, clearly directionally correct. Clearly we need more capital, and particularly more capital in the systemically important institutions. We need to have a little bit more regulation of those institutions, because we shouldn't let a company jeopardize the entire financial system. Absolutely. Yeah. I think we have to get rid of this ability to shop for regulators, so the elimination of the OTS is a good idea. And the one I think that is most controversial is this Consumer Protection Agency.
Right.
And I have kind of a dual feeling on that. I am 100% sympathetic and in agreement with the need to have consumer protections in lending products.
Right.
In investing products, we have this idea you can't sell a product that's inappropriate to an investor, and we don't have that very much anymore. Loans, we'd had unregulated people creating these toxic loans, and that should be stopped.
All right, lots to talk about. Next time we'll talk about M&A.
Okay.
I appreciate your time. Thank you so much.
Thanks very much.
Schlosstein.